Hey there, welcome back to the channel. If you've watched any previous videos, you probably know that I don't like to just throw random stuff out there because, oh, I have to make some content this week, right? Don't do that at all. Everything I put out in my free newsletter or free in these free YouTube videos, I try to be as diligent as I can to give an actual good idea. It would make me happy if I gave out a free idea and it actually worked for someone. We're in the help people business, right? If you're on YouTube, right? Anyway, today we're going to go back. I talked about this particular portfolio over 2 years ago now, and we're going to take a look at where that came from and how it's done. Now, as you can probably see by the title, this particular system, this particular portfolio, I should say, has actually done quite well. And it worked specifically very well for Bugs Bunny there, right? But we're going to talk about what it is, give it away once again, and then update it, right? Maybe even some background. But first, just overall, if you don't know me or don't know anything about me or the channel, I've spent probably 20,000 hours trying to develop trading systems. Now, how do I know that to be true? Well, I did count it, and I spent over 2,500 hours on just one particular system. I end up spending about 1,000 more hours on that one. So if I spent 3,000 hours on one trading system and I studied trading systems for the past 12 or 13 years, right? 20,000 hours is probably conservative, okay? And that's great. Yay, I must be so smart. Well, here's the problem. What do I get when the system I've spent 3,000, 4,000 hours on all of a sudden becomes null and void? A, systems degrade, and that's fun, right? What is the stat from reputable people who develop trading systems and develop good ones? 99% of systems fail. I've heard that from someone I trust. Anyway, what do you get when that system is one of that 99% and it fails? Or what if the broker that you use for Forex in the United States just start throwing out basically bogus data, and MT4 platform starts giving you testing results on essentially bogus fake data, right? Completely unrealistic, completely untrustworthy, even if you pay for it, right? Oh, and by the way, they start upping the spreads up to 50 pips, for example, in Forex, right? So anyway, what do you get from any of those circumstances? You know what you get? You get empty code that doesn't work and sadness. Okay? Right? Again, any respectable guru who develops systems says 99% fail. Again, that's not my number. It's true. And that's a lot of fun, right? Yeehaw. I'm just going to spend 20,000 hours and 99% is not going to work. Do I regret it, though? Do I regret all this time I've spent looking at systems and developing systems? We'll just move on. Now, there is one thing I've learned, though. After 20,000 hours, I've learned that simple is better. And that's not revolutionary, I know. But more importantly, simple seems to last forever. And that's what I'm interested in, right? Morgan Housel's book, when he talked about not something that works lately, but will work forever, right? I am very much aligned with that. I want to talk about things that will work forever, that will, or at least for a decade or more. I don't want to just do the new hottest thing, not interested. I want the thing that lasts forever to also be new and hot, even though it's not new, okay? Well, if simple's great and simple lasts forever, what is simple? Well, here's one. Momentum. Momentum is simple to understand, right? Here's your definition. If something has gone up before, chances are it will continue to go up in the future. That's momentum. Time series, trend following, whatever you want to call it, it's momentum. And that hasn't changed for hundreds of years. We have data on that. Hundreds of years. If you buy what goes up or you keep buying what has gone up, it goes up. Right? The best indicator of what's going to happen in the future is what happened recently in the past, right? So anyway, I've been writing the free newsletter since 2013. I've been doing this YouTube channel for years and years and years. And back in 2024, I was researching portfolios that I wanted to highlight, not a recommendation, of course, but I wanted to send out a portfolio that should continue to do well. How did I know it would do well? Or how did I think it would do well? Because what goes up keeps going up, right? Question mark, right? Well, the answer we're going to find out, right? Does something that has gone up keep going up, even though I just said it's been around hundreds of years? So anyway, in March 2024, I gave away, just for free, a portfolio that had beaten the market for such a long time. This particular combination had done well, and that's what I went out to find, right? I went through a bunch of ETFs, not single stocks, because single stocks can go to zero. That's too risky for me to send out free as a possible idea to consider, not a recommendation. But this portfolio had done well for a long time, which we'll see. And it had a tiny bit of diversification. Not much, but it had some, right? But ETFs are naturally diversified anyway, or at least they have a lot of stuff in it. So let's talk about what it is. This is from the newsletter in March 11th, 2024. So we're here in 2026. This is over 2 years ago. SMH, XLF, QQQ. Now, anyone, I'm sure, would love to criticize some overlap or criticize all you want. I love it. Happy to hear it. Comment, whatever you want to do, right? But here's why I sent it out for free as a possible thing to think about. It had momentum, and momentum is forever, right? Question mark. Now, this particular portfolio had semiconductors, very hot right now, like Hansel. Had some tech via QQQ. You know QQQ is not all tech, right? Because that shocked me several years ago when I found out there's all sorts of boring things that have nothing to do with tech in QQQ. It just has some tech, and it's heavily weighted, but QQQ has all sorts of things in that 100 portfolio, 100 stock portfolio. And of course, it has financials. So if tech and semiconductors are hot, financials probably aren't. I mean, the correlation is a little vague. But if financials are doing well, maybe these. Anyway, it seemed to work together, right? We can sit around and fabricate reasons. Guess what? Every bit of stock commentary is entirely fabricated. Well, this went up because nobody knows. Okay. Now, we can make common sense, and there are definitely common sense conclusions we can make. And this seemed somewhat common sense, financials balancing out semiconductors. But anyway, that's a portfolio. It's diversified, kind of. But regardless, had it beaten the market, dare I say, destroyed the market for the past decade? Had it? Well, here you go. From March 2014 to March 2024, look at this. From the newsletter, $10,000 would have turned into $56,000 using this simple portfolio. Is it diversified? $56,000 says it's diversified. I mean, no, it doesn't, but you get my point. Meanwhile, lowly SPY had only returned 33.7. Jeez Louise. All right. That's 18.8% compounded to 12. And that is a ton of money, as you can see, almost double, right? Standard deviation, the best year was almost a 50% gain. In the worst year, just a little bit worse, which you'd think with all that volatility, it'd be much worse, but it was a little bit worse. Max drawdown, a little bit worse. Risk-adjusted basis, Sortino ratio sharp, way, way, way better. So this portfolio is way better than an index fund in every way. Here's the curve. Want to take a look at it? They were neck and neck for a while. And then, oh boy, 2017, it pulled away. They both went down together, pulled away, went down together, really pulled away, went down together, and then it's just absolutely cleaning SPY's clock, right? But that was when I wrote the newsletter. I didn't know what would happen going forward, right? So what do we do next? I sent out a newsletter. You read it. You like reading interesting ideas. Hopefully it's interesting. All right. Well, if you looked at that, what could we do? Well, one, we could doubt it. We could pick it apart. We could say, oh, QQQ and semis, they're too overlapped, and financials won't really offset. And in 2024, right, we had gotten out of 2022. The bull market was back. Everything was too overbought. This portfolio was too overbought. Basically, this all is too good to be true. I'm just not going to buy that. I'm going to keep with my boring little index fund. Or two, We could create a trading system based on indicators, right? Well, maybe we only buy these three when they're above the moving average. A perfectly reasonable thing to do. Or only buy on RSI dropping into oversold. That would be a reasonable thing to do. All sorts of simple trading systems we can make. It will almost certainly make less money, okay? And one thing I found when you're dealing with Forex or futures, right, you need trading systems. You can't buy and hold really either of those really ever. Nearly impossible. But stocks, on the other hand, every time, and again, I studied this for 20,000 hours, and I studied stocks too. Every trading system I ever created or tried to create made less money in stocks, period. Now, the drawdown may have been better, so you could say on a risk-adjusted basis, maybe. But it was far less. Every system on TQQQ, every system on Apple, every system on Tesla, everything. I'm just telling you my experience. Every single time a trading system did worse. Okay? So, but you could do that and certainly do worse, right? Almost certainly anyway. Nothing is certain. Or three, we could have just said, that's a nice simple idea. Momentum is a simple idea. I'm just going to stick with the concept of what goes up will continue to go up. I'm going to put, $1 in each fractional shares. You get the point. And what to do next, part two, is here's the thing. Even if you took a portfolio like this and just decided, hey, I'm going to hold it. Here's the benefit of not doing trading. An investor would have assets at the end of 2 years, right? Let's say we started this in 2024 to now. We'd have assets, even if it didn't do it as well, even if it didn't continue to kill the market. And that's the difference. We have assets. We can borrow from those assets and pay monthly bills. Or we could say, listen, I'm going to switch and I'm going to go to all income and I'm going to have that pay me dividends and distributions and I'm going to live off that. Oh, I'm financially free. A futures Forex trading system would be left with just less money. Now what do? How do I borrow off my Forex trading system? How do I borrow off my futures trading system? How do I borrow off that? I just have less money. When I go there, that's it. That's what I get. And I hope my trading system comes back so I make more money, right? There's no way I can borrow or pay any monthly bills. And if I do, I could be paying as my account goes down. And again, a stock system, I'd have a lot less money, almost certainly. And every time you sell, taxes are taken out. And if you do any sort of day trading system or even swing trading system, you're going to get tons of taxes taken out. Buying this three-pronged portfolio or one like it of your choosing, this is not a recommendation or financial advice. If you did that, then guess what? No taxes. And if you borrow money, there's no taxes, right? So that's something to consider. Again, this is not financial advice. Do not risk any money you cannot afford to lose, for education purposes only. So now, let's say you just wanted to follow along. No one recommended this, right? From March 2024 to May 2026. Now, you do have to rebalance once a year. I know, it's annoying, but you have to rebalance. So that's what these numbers are based on. Keep that in mind. They're still pretty good without. You can run those tests for yourself. All right, $10,000 starting now, March 2024. It almost doubled. Now we're up to 19. How did an index fund do? 15, right? Again, what was that? It was almost double in the 10 years leading up. Well, now we're over 2 years and it almost doubled it once again. Okay, we've had some dips during this period, but it's killing the market again. Best year, way better. Worst year, oh, look at that. Maximum drawdown, about the same for almost double the money. Crazy. And the risk-adjusted ratio, this portfolio is way higher. Remember, this is rebalanced. Pulls away a little bit, neck and neck. And then 2025, big pull away. 2026, it's pulling away even more. And the bottom line is, this portfolio has almost doubled the market again. It did it before in the research when I didn't know what would happen, and it's done it again. Of course, newsletter readers got it for free, and people watching the video has got it for free. Just something to think about, right? Now, will this portfolio go down when the market falls? Of course, we saw that, right? I just showed you that, of course. But if you're not selling, you could just add at that point, or just keep going, do nothing, just let it fall and come back. Or switch to income, as mentioned. All right, I made a bunch. Let's get some dividends and live off that. Bottom line is we have assets. If you do something like this, you have assets. And you can see what happens when the market turns bullish again, right? When the market is bullish, something like this goes crazy. So yes, even if it falls, if you hold on and the market ever turns around, it's going to absolutely destroy the market, right? Which, of course, pretty interesting, or at least something to consider. All right, if you want more portfolios like this and case studies and all sorts of things, please join the Dividend Income Program. You can click the link in the description. I have sample portfolios. They're all updated in real time. I take suggestions. I'll make anything you want. Not anything you want, but if you have a reasonable suggestion, I'll log it. I will track it, and I will put it on the site, and we can go from there, right? Happy to take suggestions. Love email feedback, all right? And if this has been useful at all, please like and subscribe and comment and do the things that YouTube asked me to tell you to do. And honestly, I really appreciate it. That's all for now. Be back soon. Talk to you then.